RSI is oversold, so you buy, right? So you bought, and it kept dropping. The indicator wasn't wrong. You only had one confirmation. David Ryan? He uses this indicator to time his profit taking, and Robert Miner. His oscillator also combines RSI with this indicator. That indicator is stochastic. But George Lane, the creator of Stochastic, said this: when you combine them, they become almost invincible. Combine. The indicator itself isn't what matters. What matters is how you combine it with others. I have my own indicators too. I built them over 15 years of trading, but today you don't need them. Everything we're covering today can be done with free indicators. 3 setups, 3 confirmations, 3 entries, and RSI. Put these 3 threes together, and the strategy is complete. And at the end, I'll show you the day this strategy failed. First, open up TradingView on your PC. If you haven't signed up yet, go ahead and sign up. If you're not sure how, I'll put a link below the video. By the way, if you're planning on trading long term, I'd definitely recommend using TradingView. You get a free 30-day trial, so you can try it out first and decide later. This isn't sponsor, and you don't have to use my link to sign up. If possible, use both your exchange and TradingView side by side on PC. You can also use TradingView on PC and your exchange on mobile. To use what we're covering today, you'll need at least the essential plan. Click Layout to split your screen into 2 charts. Set the left chart to the 1-hour time frame and the right chart to the 4-hour time frame. Let's remove volume. Click on Indicators. First, search for RSI. That's it for RSI. Next, search for Stochastic. We're going to add 3 stochastics. You should see all 4 indicators now. Now we're going to turn these 3 into earthquake sensors. One is very sensitive, one is in the middle, and one is very slow to react. The sensitive sensor reacts to even the smallest vibration. So it'll react to price movement first, right? The slow sensor won't move much on small fluctuations. It only moves when the bigger trend actually starts to shift. The core of today's strategy is using the difference in sensitivity between these 3. Now let's set them up. Let's set up the first one. Go into Inputs, enter 5, 3, and 3, then hit OK. The most sensitive sensor is ready. Now let's set up the second one. We'll just double each number. Enter 10 and 6 and 6. Last one. Again, we'll double the numbers. Enter 20, 12, and 12. And now the slowest sensor is ready too. Do the exact same thing on the 4-hour chart. And we're done. Pretty simple, right? Does the chart look too complicated right now? I get it. But trust me, and stay focused a little longer. By the end of this video, you'll probably go, wait, that's it? Alright. Everything's set up now? The second 3. Confirm the entry signal 3 times. There's only one thing that matters here. You're looking for the moment all 3 signals line up in the same direction. Are all 3 stochastics up high or down low? It's even better if they push beyond those levels, or at least getting close to those levels. If all 3 signals are up high, then you should start looking for a short setup. If all 3 signals are down low, then you should start looking for a long setup. Ideally, they'd all line up perfectly at one point, but that rarely happens. What matters is finding a point where all 3 signals are grouped as closely together as possible. What are you talking about? Relax. Let's break it down together. The first signal to trigger will be the first setup. Since it's the most sensitive sensor, that makes sense, right? But first, there's a minimum condition for the first signal. That's RSI. RSI first needs to go overbought or oversold. When RSI moves up here, that's the overbought territory. And when it drops down here, that's the oversold territory. If you're looking for a short setup, RSI needs to be overbought. If you're looking for a long setup, RSI needs to be oversold. A lot of traders actually use nothing but RSI overbought and oversold territory. And honestly, there's nothing wrong with that. But in trading, the more confirmation you have, the better. Most of you watching this video are probably beginners. And when you're a beginner, it's hard to build confidence in your trades, right? But today, you'll have at least 2 confirmations, and sometimes as many as 4. Back to the point. If RSI is stuck somewhere in the middle, then even if the stochastic gives a nice signal, it's not really a trade you want to take. Alright, let me summarize. First, RSI goes oversold or overbought. Then the 533 gives the first signal. At this point, you're just starting to see the first signs. Then the 1066 starts confirming the move. That's your second confirmation. Finally, if the slowest setup, 20, 12, 12 confirms as well, that becomes your third confirmation. That's where all 3 confirmations line up, the core of this strategy. The final three. You split your entries into three parts too. It's simple position scaling. Let me show you an example. Let's say you're entering a position worth 10 Bitcoin. You'd scale into the position like this. Let me show you on the 1 hour chart first. RSI dropped into oversold territory. Good, the minimum condition is met. The first signal dropped too. Now we're starting to see signs that a move higher could begin. But we still don't know if this is the real start of the move yet, right? So if we stay patient and watch closely, where's our entry? Right at the crossover of the second line. This is where we enter the first 3 units as a scout position. We're only seeing early signs here, so it's still too early to be fully confident. Now the second signal has also crossed above the line. So if we stay patient and keep watching closely, where's the entry? Right at the intersection of the second line. We add another 3 units here. That's our second confirmation. Finally, the third signal follows. You guys probably know what's coming next, right? Third confirmation, this is where we enter the rest of the position. Now let's look at the 4-hour chart. RSI is overbought. Minimum condition met. The first signal moves above the line too. First entry at the crossover. Then the second signal moves above the line as well. Second entry at the crossover. And you can see the third signal coming in too, right? Then you take the third entry at the crossover point. RSI was our basis for entering the position, right? You can also use RSI as your exit criteria once RSI crosses the midpoint and starts moving to the other side. It doesn't have to touch the opposite extreme. The moment it crosses the midpoint, start preparing to take profits. Of course, the closer to the opposite extreme, the better. And if you get a big candle like this, even better. But this part does require some personal judgment. And if you're a beginner, that's completely normal. Once RSI crosses the midpoint, take at least 50% off the table. I recommend this kind of mechanical approach. Wouldn't going all in on the first entry make more profit faster? Absolutely not. The first entry is only an early sign at best. If the second and third confirmations don't follow through, it could easily turn into a fake move. Scaling in also helps you build a better average entry. The examples I showed you played out exactly according to the signals. What if the trade goes against you? This is the part that really matters. Do you know what separates good traders from bad traders? It's not because they're better at entering trades. It's because they're better at managing exits. Let's take another look. We entered the trade, and it's moving exactly as expected. RSI starts crossing the midpoint toward the opposite side. So what do we do here? We start preparing to take profits. And if we get a big candle here, even better. This one was lucky. Take the profits and get out clean. But what if it doesn't go as planned? There's a very clear stop-loss line. Look at the entire entry range from the first to the third entry. The stop comes the moment price breaks the highest or lowest point of that range. The key is to cut the trade without hesitation. If you're in a long and the low gets broken, cut it. If you're in a short and the high gets taken out, cut it. That's your hard stop. Let's look at an example. You should have cut it immediately. Actually, there were 2 chances to stop out here. We entered in 3 different spots here. We went long, right? So we look at the lowest point across all the entire entry range. The moment price breaks below this level, you cut the trade. Actually, you could have stopped out right at this candle too, since you guys are beginners. But RSI barely moved here, right? So if you decided to give it a little more room, actually, it's still the same. Let's look at one more. Here the first and second signals overlapped together. The setup definitely looked promising, but what happened? Stop out. We would have taken a short here, right? Then we look at the highest point in the range. The moment price breaks above that level, you cut the trade immediately. Wait, doesn't that mean we lose money if we're wrong? Yes, exactly. Most people only think about how much money they can make trading. They only focus on profits. But there's one thing experienced traders always say. The moment I learned how to cut losses properly, that's when my account started trending upward. I agree with that completely. I went through the exact same thing myself. The problem isn't the losses themselves. The real problem is holding a losing trade without any clear rules. The moment your setup breaks, that's when you cut without hesitation. Trust me. The moment you learn how to do that consistently, that's when you can start making money trading. Now you might be thinking this. Wait, if this works so well, why does everyone still lose money? That's a fair question. Under normal market conditions, this works really well. The win rate is actually pretty high too. That's why a lot of traders use this strategy. But sometimes, the market goes completely insane. Remember? Bitcoin kept dumping after trading above 100K. Let's look at the chart. The first, second, and third signals were all buried at the bottom. To anyone looking at the chart, it looked like a perfect long setup. But what did the market do? It completely ignored all those indicators. Then it dumped even harder, straight into the ground. Anyone trading the triple stochastic setup that day got destroyed. Trend-following traders, retail traders, they all got wiped out. Robert Miner had his own indicator. He could have sold it, but in his book he said this: "Don't let anyone sell you a magic indicator. At the end of the day, all momentum indicators show the same thing. No indicator can account for extreme market panic." What did Lane, the creator of this indicator, say? Combine them and they become almost invincible, almost. On that day, even combining them wasn't enough. What you learned today is not a method that wins 100% of the time. So what, we just shouldn't trade at all? No, that's not what I'm saying. We talked about hard stops earlier, right? If you're in a long and price hits the low, cut it immediately. If you're in a short and price hits the high, cut it immediately. Same thing if RSI can't break through the midpoint and just stalls out. You need to start preparing for a stop out. If you're a beginner, I strongly recommend using stop loss orders. Set your stop at the low for longs and at the high for shorts. We already had 3 chances to enter. If all 3 entries got filled and price still breaks your stop, holding on is just foolish. In the long run, the most important skill is learning how to read market conditions. Even a strategy with a 90% win rate can lose everything in one extreme panic move. So if the market starts feeling abnormal, you need to learn how to step back and stay out of the market. Of course, beginners usually don't have that kind of market awareness yet. Right now, what you need most is practice. Don't let your emotions swing you back and forth every time. Put aside all thoughts and greed and focus only on your criteria. This might sound obvious. Don't try to beat the market, try to read it. That's the mindset of someone who can survive 5-10 years. If you can combine triple stochastic with reading highs, lows, and trend structure, it becomes even more powerful. Check out my other videos if you want to learn how to read highs, lows, and trends. I analyze the market and charts on this channel every day. You can see how I look at the market every day, the whales moving the market, and how to read their moves. I'll keep sharing that with you guys. This has been Chart Straight.